Hey, good morning, everybody. How are you? September 9th, 2020. Welcome to test day, final exam day for the bull market, or at least a short-term bull market. I'm kind of blowing it out of proportion here. Somebody give me a couple of knocks here, though. Anytime soon, anytime soon. There's Big Cap J. Thank you, sir. Knock, knock. I hope everybody can hear me. Let me know that the sound is good. And good morning to everybody from wherever you hail. Colorado, I saw somebody with talking about a little snow. Let me move the camera in so we can talk a little bit more here. So I saw some snow in Colorado, and what you guys had temperatures of 90s, I think, over the weekend while we were all getting ready for the week here. You guys were suffering through a heat wave and then snow. Not even nice. Not even nice. Echo going on. I think I've got, let's turn the gain down just a little bit, but should be good. I hope. Maybe do a reload if there's too much echo. So we got a lot to cover today. Market kind of backed itself into not a corner, but something I think that we suspected here. I'll talk to you for just a couple minutes about that. You know, the NASDAQ 100 obviously was the leader all the way up, and we've been talking about the last couple of weeks how there was a little bit of froth on that. When you look at Apple and Tesla, they announced stock splits, and everybody piles in as if they were selling it for a discount. And you and I both know that there was no value created by that split, but at the same time, there's an illusion. There's a psychological matter to it, or a psychological urgency to getting in at that lower price. We saw the shares go up, and then both of them have corrected. Now we've seen 33% shaved off of Tesla. Is it time to buy it? We'll take a look in a couple minutes here. We'll look at the charts. The charts are more important than anything right now, folks. And this is where I'll go off and give you a little bit of my first little education, or you know how I like to throw these tips in. Questions were brought up yesterday during my 11 o'clock live stream with Night Trader subscribers about how to calm things down, how to slow it down, how to be patient, how to, not freak out during a market pullback like this. And the one thing I can tell you is that looking at the data and the trends are the things that are going to help everybody, whether you're an investor that's investing your 401k or your IRA, down to the trader that's trading on a day trading basis. That's the one thing that's going to remain constant through all of this. The politics can be thrown aside. Headlines on COVID-19 can be thrown aside. And the technicals are going to give you everything you need to do. It's one of the reasons I've been following them for 30 years. I started with graph paper and a pencil and a calculator when I did this. And it wasn't my choice. It was my mentor's choice. But anyhow, it's something that you need to adopt to, and you need to adapt to your trading. And in times like this, it's what's going to make you more money, quite frankly. So let's talk a little bit about, and let's go to the slides here very quickly. And I missed everybody, man. It's been 4 days, I think, here. So I got to say that I missed this time, whenever we spend it. I know I always tried to tell you I enjoy this, and I hope that it helps everybody's trading. So anyhow, breaking news this morning, what we're going to do is the overnight developments and the headline tradings. That's normal for us. Where does the market stand from a technical perspective? That is today. To give you a hint, the QQQ, the NASDAQ 100, sitting on its 50-day moving average. The IWM has been toying around with the 50-day moving average. We're seeing tests here that we need to be aware of, whether they're going to pass or fail over the next couple of days, including the VIX. What's going on with the VIX here, and whether it's going to pull back below 30. Remember, I always tell you the VIX knocks twice. We got the first knock this week when volatility returned to trading. It's going to be a situation where we're going to see something like we saw in February and March, where we pull back and then spike a second time, huge, or it's going to be one of these little bump and grinds all the way down. Investing versus trading in this environment, I'm going to give you 3 long-term buys, 3 short-term trades. It always starts with 3 guys, but at the same time, I'm going to go well beyond that as we look at the charts, because there are a lot of opportunities out there for both investors and traders when you look at this market and where it sits today. And then I want to hear about your biggest concerns or questions. I do want to hear about your charts, and we can look at, everybody. Mongo, I'm seeing Mongo already making an appearance in the chat. We can look at, some plug power and some of our alternative energy. Tomorrow, I'm going to give you an update on our alternative energy project here, but I want to hear concerns and questions, and let's take it from a question perspective. Start loading them up in the Q&A area, which should be active right now. It is now. I just did it. So you should be ready to go and start putting your questions in there, and I'm going to hit those first. So let's take a real quick look here at headlines. And first one you have to talk about is COVID-19 pharma. All the pharma companies here are getting pulled in every direction. We're seeing a tug of war. This has turned into a real life horse race. And this is something that I warned you about a couple of weeks ago, maybe even more than a month ago. This is going to be one of those things that changes the landscape of these companies trading for the next 3 to 4 months or so. And we hear rumors about November 1st coming out with, or states better be ready. I think we can all look at that and say it's a little bit of horse pucky. And, I think it's going to be a little bit longer, especially when you see some of the news headlines that came out on AstraZeneca last night. One person in that test, in the Oxford study, got sick and they stopped the whole thing. They halted. The stock was down more than actually down by 12% yesterday. And after I was trading after the announcement, down 1.2% right now. All the suckers selling it out at 12% losses. And they're selling it at losses if it's trading in after hours. That goes to one of the questions that was asked yesterday by ZB. It's not a loss until you sell it. I'd feel like a sucker if I'm selling AstraZeneca yesterday at a 12.1% loss. And today it's getting ready to open 1.2% lower. Don't act on these headlines. Stan Druckenmiller was on this morning on CNBC, and he's talking about how this market is a mania. Everything from Robinhood investing all the way to headlines like this, pushing and pulling a stock. Everybody's trying to pile in so quickly because of opportunity. There are plenty of opportunities. Take a breath. Wait until the news gets processed by the machine, the market, and discounted, and then take a look at it the next day or the day after, especially on headlines like this. Don't be a sucker. Anyhow, there's rule number 2 for you for the day, or educational tip number 2. Don't be a sucker. So anyhow, we look at this and, Moderna ticks higher after hours yesterday, and they went up 3%, I think, in after hours trading when the Oxford 19 vaccine was put on hold. It's put on hold temporarily, and everybody's probably read this by now. This is part of the process of a phase 3 test. So if somebody gets sick, they stop everything because they're doing this on a large number of people. They check that person out. They make sure that everything's going to be fine. And then if it's okay, they move forward. You can see AstraZeneca was trading down more than 8.26, well, $8.26 yesterday at the point when I took that screenshot. Now we're trading much higher. Moderna took an absolute beating yesterday. Down 13%, got downgraded to underperform. And this is based on basically the analysts looking at the revenue and saying, hey, they're not going to be able to make the revenue to value the stock at its worth. The market took its toll on it and down 13. It's up about 3%. And then BioNTech and Pfizer agreed to potentially supply the EU with 200 million doses of the Moderna-based vaccine candidate. This takes the stock up 6.1%. This is one of the stocks that not only have I talked about on Fast Profits as one of the sleeper stocks in the group, but also as part of my night trader system. We've looked at this stock and we have a position in it because it is one of those sleepers. And it is an opportunity. Oh my gosh, look who just stepped in. I have to stop for just a second because he's been absent for a while. The knight who says Neek is with us. We were just talking about you yesterday. I hope your ears were burning. That's how closely we know everybody, and I love that. Anyhow, looking at BioNTech, it's up 6.1% this morning on that news, and it's going to, believe it or not, it is still in a bullish trend with the 50-day. We'll look at the chart of that in just a second, and how I think you should trade all 3 of these stocks. And next one, phase trial, no, in a number of trials, go and stop because, yeah, this is... There you go. Thank you, ZB. This is exactly what I'm talking about. This is part of the process. It's a part of the thing that matters here in a phase 3 trial is where you get to the finish line. And in this particular case, you go through challenges. Wall Street set to bounce after a 3-session plunge. The market cap of the equivalent of one of the Googles got knocked out in this last 3 days. Let that soak in for a few seconds here. You're talking billions. Elon Musk, there was a great story on Bloomberg last night, lost $18 billion as Tesla's dropped 30% here. This market, and that's where Druckenmiller's comments about, oh my gosh, Nikki Timbo. That's where the comments about this being a mania turn so important here, folks, because a market that reacts like this means that this testing ground that we're in right now, today, is going to be a proving point on where the market goes over the next 4 to 6 weeks or so. And I say that because everybody's going to react again to the one thing that is a common thread out there, and that is the technicals. Names like NVIDIA, Zoom, Tesla, you name it. I don't care who the heck it is. Procter & Gamble didn't pull back. And there's a reason why, because it's a consumer staple company and they're still going to be selling toilet paper and a lot of it. But these are trading higher today after billions were shaved from the NASDAQ's top 10. I mean, billions. There was no rotation out of the risk asset classes over the last few days, which I've been watching very closely. If you look at the financials and some of the value, quote unquote, I'm doing my air quotes when I hold that up, the value stocks did not see attention, financial specifically. So the question there is, do you buy the dip? Or do you just wait? Do you sit around and wait? Well, obviously, you can look at it from the perspective of buying the dip in March got you a lot of money, 70, 80%, depending on the stock, 100, 150, 200%. We're going to look at a few of those names in a couple minutes. And then the last item I want to call attention to is the mortgage demand this morning that came out. Home buyer surges from 40%. We were 17% last month, 30% the month before. A little bit of a drop in rates. Now people are seeing rates go up a little bit, and we're getting that sales spree kicking in again. Absolutely again. Three stocks that I like: Zillow, Rocket, and Redfin. We're going to look at those charts. I mentioned all of those last week because Rocket was one of my new, if you will, strike point stocks, and it's been pulled back because of the short-term selling here, but it's still giving us an opportunity. Here's our chart of the day. S&P 500, 3,300 is what I told you we needed to watch in terms of a kickback level. We haven't reached down to that yet. We are well out of overbought territory. This tells you, folks, that you have got that rubber band is now nice and flexible, and we can go one direction or the other. Up here, when we were overbought like this, technical 101, this is why the RSI always comes into play on buying decisions for me. I haven't been adding a lot of positions to my service portfolios because we were running into overbought territory. The market was due. I was battening down the hatches. Didn't want to add a VIX or a volatility hedge yet because premiums were still too high and we were still not showing like we were going to bounce high enough on the VIX to get what we needed. But anyhow, 3,300 your level on the S&P 500. Look at the volume in the last 3 days. Nice, healthy selling volume, which is what you like to see whenever you're coming down to test a moving average. We got to look at also the NASDAQ 100 because this is where all the money was lost. You look at it sitting at the 270 level. Nice round number. We've also got a little bit of consolidation in the beginning of August from that, and you almost had a top in July. What that means is the market, and I mean traders, are going to be watching this level. Look at the blowout volume that you see here, though. Look at that absolute killer volume compared. You are in 3 days doing the type of volume numbers we were doing back in March at the bottom. I love seeing this, folks. This was a frothy market. This is where all of your money was tied up and going. Tesla, Google, Amazon, Apple, Facebook, Twitter. Those stocks were the ones that have caused this stumble, and it's caused everybody to kind of close their eyes and hit the sell button as quickly as possible. Yesterday, the markets were trying to make their way back up to a break even, and then we shot lower in the afternoon as everybody kind of puckered up and said, no way, I'm going to try to hold through the night. We land on the 50-day moving average and puts us in test territory. The other one that I'm watching right now, that IWM, I always tell you, watch the risk, folks. This is it. The risk barometer right now sitting at the 50-day moving average. And notice that we've got less of a percentage move. A 4% move in the cubes last night, and you get a 2% move in small cap. And it's on heavy volume, not as heavy as what we saw in March, but we're on heavier volume right now. So it's not like people were asleep at the wheel. This tells me that the risk trade is still alive, and that should help us see a bounce right now from the 50-day moving average on that NASDAQ 100, which means opportunity should be abound to the upside for the short term. And short term, I'm talking the next 4 weeks or so, unless somebody says something politically messy. And then obviously, and it can be anybody from any side at this point, folks. Here's your look at the VIX right now. Volatility gave us that spike. VIX always knocks twice, right? So if we compare to what happened here, and the reason you're looking at a year-to-date chart instead of my normal 6 months, I wanted to make sure that we could look at what happened in February. We got a shot up to 30, and 30 is what held it right before it pulled back and then shot back up again to 45. And then we got a third knock, and then just for good measure, the VIX gave us a fourth knock to make sure everybody was awake as the market bottomed. I'm expecting us to pull back to that 25, maybe look at the 50-day and the 200-day as possible support. The 30 level is going to probably come into play today. But at that point, you look at 27.5 down to 25. And then if we start to curve back up, notice the trend, the tail on the 20-day right now telling us the trends change. And that is just a simple observation, because we're only 3 trading days into September, and I've been screaming and pounding the table at you guys and everybody else that September is the most volatile month of the year. So double knock, we're going to go back on a 25 and a bounce. My subscribers, my followers are going to be getting into a volatility trade pretty quick at that point. And it may just get us 25%, but you know what? 25% is 25%. Moderna. Whew. This has been the star, the absolute star of the entire show. Whenever you said COVID-19 3 months ago, Moderna, 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 every time it spikes 30%, I tell you to sell it, sell it, sell it. Now you've got it in a trend, and it's a dangerous trend, folks. It's a trend now where the 20 days down and actually dictating the move, telling you the traders are in charge of this stock. The traders are in charge of Moderna. It's not the headlines anymore. Traders are in charge of it. Volume's been dropping. Whenever we test that 20-day, you see some selling pressure. And that 50-day moving average is rolling over. Now, the one thing I'll show you here is Moderna is right now, actually, if I were looking at this from the perspective of my strike point system, it's a little bit of a squint here, but with this 50-day turning negative, and you've got a 20-day that's confirming that, and you're oversold right now, you're going to get a bounce right now in Moderna. I'm going to tell you, Moderna's going up to 62.5, maybe even 65, and at that point, you're going to run into the 20-day, and that is when this becomes a problem for Moderna, unless they suddenly come out and say everything's fine, and we've got the problem solved here. This is going to be a stock that'll run from 65 down to 55 and maybe even lower again. Keep your eyes on Moderna for the next downtrend here, and it could be on a quick headline. They're getting a little bit of a headline help today, but when you compare it, here's the horse that I like in the race, AstraZeneca, pulled back down, and we've seen this trade below 54 last week on that selling pressure in the market, and it came up yesterday. We got a nice 2% pull out of it. We're down 1.2%. 54 is a key level for AstraZeneca. This is the one you continue to hold through the end of the year. My subscribers do have a position in AstraZeneca. I also like to tell you when I have one personally, I do. AstraZeneca is a horse that I think is going to finish this cross the finish line. And even if it doesn't, it's going to be the jockey on the damn horse, because they're going to be they've got the facilities to make large quantities of this vaccine. So if it doesn't come from the Oxford trials, they're going to end up making it in one of their factories, because they've got the process that they can do it with. I don't expect to see Rochester, the old Kodak facility, making any of the vaccines before I expect AstraZeneca. That's pretty funny that that news story has disappeared so quickly too, folks. Kodak Chemical now. So Pfizer is the other one in the race, $36. It doesn't look like it's in the race right now, and that's because Pfizer's a lumbering giant. It's not really going to make a huge, if you think about it from a revenue standpoint and what it's going to throw to the bottom line for Pfizer, it's not going to make a huge difference. It's not a drop in a pond, but it's a drop in a bucket in terms of what the vaccine could do for Pfizer. So that's why you're seeing it trade without that trend and a little more volatility here, testing the 200-day moving average. You're going to get a bounce out of Pfizer. Pfizer right now, I say, is one of those that you don't hold out for for a solution in the long term. But BioNTech, something that, right around here, I was talking about this stock and how this needed to be actually a stock that we needed to hold on to, gave a recommendation for it, and has had a rough go. But the 50-day has kept me in this position. BioNTech's actually getting an announcement that they're going to be part of anything with Pfizer and making some of the vaccine. The stock is now trading up at the $68 mark, and we'll see where that goes for the rest of the day's trading. This is the type of headline that's going to pop it up to the 50-day moving average, and a break above that 20-day is really going to be key. And notice that overbought level. Right now, I think this is a situation where BNTX looks good. Blue Horseshoe likes BNTX for the next couple months as the headlines continue to pile up in the COVID situation. So the other news headline that I had there was the home builders. Home builders surprising 40% year over year right now that we see on the applications. People are out there buying houses. I've told you, I've shared with you that I am in the process of selling a house as well. I can tell you people are chomping at the bit to get houses. Inventory is low. Depending upon how you price them, as long as you price them right, they go quickly. So we've got people that are running to the mortgage lenders and trying to get the appointment, because you have to get an appointment to go into the lobby to get that appointment so they can fill out the application, get pre-qualified, or they're going to Rocket, RKT, and they're doing it there. Rocket pulling back huge over the last few days. Love the opportunity of Rocket, especially with this news hitting the wire this morning before the 8 o'clock hour, those numbers hit. So I like the home builders still. This is an area of the market that has still got legs under it. I've been telling everybody, you want to wait until November, December or so. Start to look at it, really check it out in October. But these stocks are still the trend that you want to be friendly with. And let's take a couple looks at them right now. So as I mentioned, that number 40% year over year. There's the ITB. We've seen a pullback to the 52 level. Love the pullback. And it's been a relative strength pull back. Yeah, I'll hit Expedia and Datadog in just a couple seconds here, guys. I'm going to wrap up the home sellers or the home stocks, and then we'll get to the names here. So your 52 levels support for the IDP. If you're holding the ITB, I think it's a great foundation for any portfolio right now. There's your LGI Homes, which has been my favorite through this run. And there are other Toll Brothers that have been doing well. I like LGI Homes are focused in one area, really down in Texas, Dallas, where you still see a large boom, Houston, etc. The stock pulled back to the 110 level, right at the 50-day moving average. Love a move back up to the 125. The RSI's come back down. This is a good trade. Good trade here for the short term. And trading, I'm talking about next 4 weeks or so. And then Zillow Group, one of my favorites as well, $80. This is one of the stocks that I have in the Fast Profits portfolio. Fast Profits portfolio is still kicking it here. $80 is what it came down to test the 20 days where it came down and broke below yesterday, not the day before. We got support. We're going to see it boom back up again, back up to that 90. And my target for Zillow is $100 before we see the next 2 months pass here. And then, of course, I have to mention Rocket, the new IPO, dropping 8% almost yesterday, down to the 23 level. 23 is exactly where I wanted to see it. It actually is an opportunity at the 23 mark. This stock bounces up to 29, where it put its consolidation in. That's 6 points, $6, 24, 25%. If you want to do the easy math there, and I'm just doing it in the head. A nice, fast trade from, ironically, a Rocket. Let's talk about approaching the correction as an investor real quickly, and then we'll look at the stocks. 10% in 3 days provides opportunities for both traders and investors. Long-term investors, if you look at it, follow these 4 simple rules. The trend of the 50-day moving average. You want the trend to be your friend. I want to see stocks with a 50-day that are trending higher, or they've leveled off. They're not trending lower like we saw with Moderna. The 200-day moving average is holding its support. So in other words, 50 days trending higher and the 200-day is below the closing price right now. Stock's trading above its 20-month moving average, so it's in a bull trend on a long-term basis. And you can answer the question in the affirmative of, are you holding this stock for a 1-year minimum? If this is the case and these match, you have a buying opportunity. If you just bought Tesla, as I did when it was trading, and let's look at the chart. Let's look at our first chart of the day here. We'll go to the big screen here. And I always give you my disclosures here. So if you are like me and you looked at Tesla and said, you know what, CJ, if Tesla hits $440, I'm going to be a buyer. And you buy. And then it goes down to $400. And you say, hey, CJ, am I in this for the short term or the long term? Well, I've been telling everybody in the during the podcasts and such that you don't bet against Tesla. And certainly the last 5 days, you've lost 30%, 33%, but you don't bet against it in the long term. So I look at it and say, okay, I'm going to stay. I'm in it for the long term. 50 days trending higher. It's above the 200-day and it's in a bull market. I bought mine at 400. And then guess what I do yesterday? when it trades down to that 330, 325 level and it's bouncing around there, that's where I told my night trader people at 11 o'clock, hey, this is where you look at Tesla again, 325. I mean, this is dollar cost averaging, folks. It brings the average cost of my price on Tesla down. First, it was 440. Then when I bought it 400, it comes down to 425 or 420 rather. And I haven't done the math, quite frankly, but now I'm down under $300 or under $400 on my average price of Tesla. It was trading there yesterday. So this is how you approach it from a long-term perspective. If you're an investor, take a look at where the chart is, and this is ideal for me. A chart of a stock that is in a bull trend, long-term bull trend when I look at the monthly, above the 200-day, 50 days trending higher, and it's sitting at the 50-day. That's a bonus in my world as well. So it's sitting on the 50-day, which means you're going to get the traders involved. That's what you look for. Follow that equation for your long-term buys, folks. If you're an investor, if you're a trader, you want to see the 50-day moving average below the price of the stock with respect to this, so above or below. You also want to see the 20-day moving average and where that is. And if it's trending higher, that's great. If it's close to where your 50-day is, that's fine as well. I'd love to see a stock that's taking out the 20 and the 50-day within a day or two of each other. A great example of this one, and this is a shameless self-promotion, is Camping World, guys. And you and I have been talking about this one forever. The stock came up, went into a volatile period after their earnings. We had a position in it. We have two actually in it in the night trader portfolio. Had one at a 70% loss, added another position when the stock was trading down, and now we're at a net even. Actually, we're at a net positive on this, but look, the 50 days trending higher, just crossed above the 20-day. This is a trader's dream on this pullback. It's not in overbought territory. This is also, for those of you that have been listening about strike point, this is the model that is used in my newer product, my newer service that is releasing actually today. Make sure you check it out. But my shameless self-promotion is Camping World Holding here. A trader's dream. Look at it with the 20-day, the 50-day trending higher, and we're above it. It's telling you there's an indication and you're not overbought. This is an indication of what you look for as a trader right now. So to give you those bullets, stock trading above the 50-day or at it or very close, a 20-day moving average giving you a upward trend. You want to look at the overbought, oversold, and then volume on buying sign. You're looking for spikes like we saw with the cubes. This is actually exactly what we saw with, in this case, Camping World. If you look at Tesla, we'll go back to that Tesla daily chart. It is what you're seeing right now on Tesla presenting itself as a trading opportunity. Let me shut down one of my other screens here simply because I think are taking a little more bandwidth than I'd like to, and that's why we're getting a delay on the charts. Anyhow, there's your Tesla. You've got a spike in volume, selling vacuum that's going to happen, and the stock is not oversold. So you're probably asking yourself, a few others, Chris, what are the few others that I can look at? You know, what do I want to buy right now? Well, let's start going through the list, guys. And I told you yesterday, or my night trader people yesterday, semiconductors are running into some problems right now. The SSD is rolling over. You've got some problems with China, but the granddaddy, the golden boy, I think Seinfeld called it the blue shirt. No, he had Golden Boy, was the good shirt. Look at it, coming down and testing that 475 level. 50 days trending higher underneath it for support. The 20-day, we just took it out yesterday. We could take it back out. NVIDIA is a good short-term trade to run to 550 over the next probably week, maybe even 2 weeks. Fastly, FSLY. One of those that we always look at. I'm pulling up stocks from my list right now. I'm going to hit yours in a minute. 20-day trending up, starting to turn up. 50-day moving average trending higher. You're almost oversold on the RSI right now. People knocked this stock down from the 120 level down to the 80 level here over the last month's worth of trading, and from 100 down to 80 just in the last week. 20% correction in a week. This is going to get some attention here. Fastly not going away. Forget about TikTok. They're going to fill the bucket with other revenue. It's a buy right now at 80 bucks, going up to 110 here. But over the next week or so, maybe even 2 weeks, I think with some backing from the market, I have to say that if we get any bad news, obviously the headwinds from the market are going to change some of these. But these are the trades that I like to move up right now. Chewy, This one's a little bit tentative because you've got earnings coming right now. Chewy, though, look at the pullback to the 60 level over the last couple of days. You've got to sell the news risk out of the way of the stock, which is going to report their earnings. I believe it's Thursday after the close. In this particular situation, this is a stock that is a great. And I'm confirming that number real quickly for you. It is on the 10th, so we're going to see it announced tomorrow. It's a great stock in terms of that play on the COVID-19. We have seen earnings bring some of the activity off of the stock, in other words, selling the news. But this stock just got sold on the rumor here. A good number from Chewy puts it up at 80 bucks in the short term right now. Good short-term outlook here on that stock. Another one, and this is one where we'll go hybrid. How about the bulls looking for a long-term buy and the short-term people looking for a trade? God love it, Apple. Not down there at the 50-day like Tesla, but testing that 110 where we had a little bit of a bounce. Didn't come back down to that low. Notice that. Everybody else was making lows yesterday. Tesla made a lower than its previous day close, right? And you saw some of that from a lot of companies out there in the space here. But when you look at Apple, they maintain to hold on to their, they made a, I'm sorry, I'm trying to close the window here so I can get even more power, I hope here. Let's save that. So when I look at it, Apple, and I just went over to Zoom here, you saw even Zoom close lower yesterday. Apple was bucking the trend. You had buyers coming in and trying to prop Apple up. This is one of those stocks, just like Tesla that I'm talking about. If you bought it at 130 right before the split, you could have bought it back at 120 and then maybe took in a little bite, pun intended, of the Apple around 110. And now you got a 120 average price and the stock is going to take out 120 today. So you're already in the money with that dollar cost averaging on a long-term investment. From a trading perspective, I looked at the 115s right now at the monies. That's what I'd be looking at as a trader, given it 2 months to move higher, and then a move up to that 135, back up to those highs is going to more than make up the premium plus another 25-30%. Apple is a short-term trade there. Cisco is, and I only go to that because I gave a list of bull and bear candidates to my night trader people yesterday. And this is one of those stocks that I hate to bet against, but Cisco's just telling you, if you follow those rules that I just gave you, trending 50-day down, below the 200-day, 20 and the 50-day, they're both heading lower as well. And when I back this out to a monthly chart, you look at Cisco and it is not a good picture. There's a 20-month moving average. It is in a bear market. Cisco is not a buy the dip candidate, folks. It is not. That is a great example, and I'm glad somebody put it up there because it allows me to show you the difference between looking at the technicals on a 10% pullback in the market or a 20% pullback in some of these stocks and determining if you should be a long-term buyer. And in this case, Cisco is not a long-term buy, and it's a hard argument to make on a technical trade as well, except you're oversold and you're going to get a bounce off 40. It maybe goes up to 42 and you get, 7% out of that move if it goes up to 42 where it consolidates, but the 20 days right there to turn it down. And another couple of others, one of the favorites that's been thrown out by somebody on the list that I see very active is SE. Pull back to the 140 level. I watch this thing like a hawk now. 140 level, and I got to give that disclosure, position involved for me, personal position, 20-day moving average acting strong, trying to hold the stock yesterday. We pulled back down below that, didn't take out the lows from the previous day, 50 days moving higher, and you're well off those overbought readings that we had, just peaking in the overbought territory when we're above 160, kind of moving sideways there. This puts stock in a position where now it can move overhead to the 170 level on a short-term basis. SE is on my list of short-term trades. JD.com, another one. And I got to stop these because we're going to run out of time in a couple minutes. My list continues to go on and on, folks, on the short-term basis. 75 holding for JD right now. Love the pullback here and love the fact that this stock is above its 20-day. After 3 days and 4 days of selling, the stock is still above its 20-day moving average. Tells you how overbought it was, and you can see that with the RSI, but I'll be damned if this isn't a good buy at $75 with it heading back up to $90 here in the short term. Let's look at a couple of your questions because, like I said, I can go on forever, and I love going on with these forever. We should just have a charting session one day. Is it a good idea to buy calls on Tesla? Let me start by saying I cannot give individual advice, guys. I'm not acting as an advisor. I'm not, your registered advisor. So I try to keep things as general as possible. But when I look at Tesla right now, Tesla is it's one of those stocks that is a good long-term buy. As I mentioned, I've got a position in it myself. So yeah, I think it's obviously a good idea to be long the stock, whether you choose to do it by buying it or using an option strategy. I would tell you could go out and buy the calls, but as somebody will point out very quickly, they're expensive. You're going to pay a lot. You're going to pay 15, 16, 17, 20 bucks for a call on Tesla right now as it trades, where it trades. And that's only if you go out a month or two or a couple months. If we look at Tesla and the options montage, these are not cheap options. People like to buy options that are less than $5, maybe $4. I don't mind so much because it's the leverage game for me. I know what I'm paying for. And if the stock's trading at $350, $300, I know that paying for $15 for an option isn't going to be a killer for me. But if you look at the October options on Tesla, and that's what I'm looking at right now, the October 300s, or let's even say, let's go, where shall we go? I'm going to spend too much time talking about Tesla. You're going to pay quite a bit if you go with the 320s right now, and that would be at the money. So your 320s are, let's call those at the money, and you're not going to get a bid on it. Let's just say you could go out, buy the call, maybe spend 20 bucks on the option for a couple months worth of time value, and you'd be at the money or maybe in the money a little bit. Look at vertical call spreads as well. Go out to January and spread that thing up and get the cost down on that position. You limit your upside to some degree. My point is options are a great tool, and they can be used to either straight leverage it, or bring the cost of that leverage down, or protect the portfolio. Remember, it's still time to protect the portfolio. Apple and Tesla short term, love them as bounces right here. I think you get your 10 and 15 and 20% back from those. Time is coming to short bonds and take profits out of equities. If so, where do you go with cash? I'm a big fan of gold right now and mitchell. Last night you saw the Senate Majority Leader, Mr. Powell, come out and, or I'm sorry, Mr. Powell, Mitch McConnell come out and say that he didn't think that they were going to be able to have a deal. Folks, there's going to be a deal. And if it doesn't get done, it's going to get done right after the elections. It's going to be a political chip, if you will. And when that happens, first of all, I think that you're still going to have a bid for bonds. Problem is the government is getting too deep into the bond business. And that's probably why Shaw, and I agree with him, is saying that if you've got the government that owns a third of the mortgage bonds out there, and they've been buying their own treasury, they've been buying everything in sight right now. At some point, the B word bubble has to come out of the bag, and you have to start talking about it. And that's when the bond prices start to tank. Liquidity market starts to freeze up. And at that point, you want to be in gold and silver and other precious metals that are a little more tangible. What about the retail seasonal Labor Day to Black Friday trading? My favorite trade of the year. I used to call it my Harvest Moon trade. It is going to be alive and well. I am trying to put together a commentary that's actually going to talk about exactly that. I call it the Harvest Moon because Harvest Moon is usually around this time of the year. It's actually a little later this year, but I used to do it every year, and I used to make my bonus, or I'd make a large bonus on that trade when we were managing money, when we were giving recommendations to advisors and such. That was the big trade, XRT or Fidelity Select Retail Funds. You just bought it and held it until Black Friday, and then you sold it. And everybody sells the news around Christmas after all the sales come out. We get out before that. It's still intact, but it's going to be names like Etsy. It's going to be names like eBay, Square, PayPal. Think about how you're buying things and how they're going to get transacted. And that's where the retail run is going to be, the Harvest Moon rally, if you will. And I'm going to write something for moneymorning.com on that. So I'll give you, how big is that video screen behind you? 84 inches. Or 86 inches. And it's hooked up to a couple of different things, a couple of different laptops. I like to do some presentation. Good term to sell calls on long-term holds. It's always a good term to sell calls on long-term holds. Watch your premium, how much you write them out of the money right now with the market getting ready to bounce higher. You could get called away on a stock that you like. as long as you don't like going back and putting in a limit order using that sawtooth method, the sawtooth rally method, then you're fine. But yeah, I like generating extra income by selling calls on stocks that I own in a portfolio. It's a great time because premiums are going higher. Should be holding AstraZeneca. AstraZeneca, I believe, is still a buy out of that the pharmaceutical race here, the horse race that we're seeing for a vaccine. I do believe that that is a hold until the end of the year. Got a position in it myself. I have a different position in the night trader portfolio. It is something that I think the AstraZeneca crosses the finish line, as I said, either as the horse that created the vaccine with the Oxford trials, or it's going to be the jockey that's going to be riding somebody else's vaccine that they created, and they're going to be producing it. They're bound to make money either way. AstraZeneca's got the ability to do both right now. That's why I like it. Google, where do you think it'll be heading this week? Next, looking at the technical trends on Google, and Google is a great one because Google, actually, I heard this morning, the value of one company of Google was taken out of the NASDAQ 100. It's bouncing off the 50-day moving average of 1549. I think the stock probably breaks back up above 1600. It's going to be a little bit of a, again, headwind from the market. You've got to get a market that is going to swing in and see buying come in off the 50-day on the cubes. But Google, Facebook, Tesla, Amazon, these are the companies that are going to generate a quick trading opportunity because they have been the front runners. People want to buy these stocks still. They still don't have them. You also want to look at some of the smaller companies, though, that people don't have, that aren't on the radar. Take a look at a Workhorse still, which was up 12% yesterday. Take a look at a Workhorse that's up another 3% today, trading at $22 and starting to break out to new levels. Some of those names that people don't own or didn't own last week, they see a 10% pullback. And even though Workhorse didn't pull back as much, people are going to be going out and buying these. So small cap stocks, big cap tech names, even micro cap stocks are the ones you want to be focusing on right now. Headlines also aren't gonna hurt. You know, make sure you're looking at some of those COVID-19 Zoom, DocuSign. DocuSign gets killed after earnings. If you look at that, that's one of the stocks that made my list I sent to my night trader people yesterday. DocuSign just gets slaughtered after a great earnings report. And I even said before the earnings came out that this is going to be a sell the news situation because you saw it just run so higher. Look at it bouncing off the 50-day right now. It's going to take the 20-day out tomorrow. It's not oversold or overbought anymore. DocuSign is liable to make a nice run here as well. That's the kind of trades you want to look for, folks. These are exactly the kind of trades you want to look for. Tesla just popped to 355 on awesome. Shopify, love it. It's on the list. ZB knows it because he got the prices yesterday, bouncing off the 900 level, up 4% this morning. Got to take out that 50-day at 1,000. Watch the 1,000 mark because round numbers is also as well. And let's see one more here. My halo is off to the left. I'm going to cover MELI since I love MELI and I love PAGS as that combo to beat Amazon and Square, up 3.5%. Watch for the 50-day to be taken out at $1,100 bucks here. 20-day rolling over gives me a little concern, but the fact that the stock almost hit an oversold reading on its trading yesterday at 1,000 is definitely a plus for me. And I mentioned it, so I have to put it up there. PAGS, which is that fintech company that's operating in the same area south of the border here. Let's say $36, obviously a round number level. 50 days got to be pulled up. Look, it tried to hold on to that 50-day volume coming in on the selling side. RSI now down there. I don't like the trends reversing or rolling over a little bit here. Still among those stocks that I believe will be snatched up, though. And let's look at Tesla, because Tesla is going to be a machine today, pun intended, up 6.66%. Let's say it's 6.67% so that we don't, cause any headlines here. Up 22 bucks, 352. If you dollar cost averaged all the way down on this, you could be in the money on that trade, even after the stock's been shaved 30%. Long-term investing versus short-term trading. Tesla's both right now, guys. Both right now. All right, guys. that's going to be it. I'm going to wrap it up. I'll see my night trader people here at 11 o'clock. Tomorrow, we'll talk a little bit about the alternative energy portfolio that we've got. We'll review what we got into on those trades. I'll pull up the Thinkorswim account and get the rundown on those. Those stocks are going to make a nice comeback here after getting beaten up a little bit as well. So we'll go over that tomorrow, as well as some stock charts and some headlines, and get you some trades to make some money on not only the short term, but the long term basis. Make sure you check out the new product as well. Happy to have everybody looking at that. A lot of the stuff we talk about here, actually almost all of it, in use with the strike point. So until tomorrow, I wish you the best trading success. We'll see you around. Hope you have a great day. Bye-bye.